Hi everybody, welcome along and thanks for joining us. This is our 17th annual update, this year entitled Fantasy Island, why Australia is staying number one and defying all the odds and the predictions to remain a top property destination, a top lifestyle destination. So we're going to go through all the elements of that tonight. I hope you enjoy it, I hope you have some fun, and we'll get stuck into it. But before I start, I'd just like to acknowledge some of our great team. This year we've just been awarded for our mortgage business by Australian Mortgage Awards, the top broker in Australia for Helen Avis, and also the top brokerage of the year for our team in the finance. So that's an incredible result, and we're very proud of that. So make sure if you need finance, you talk to our award-winning professionals. And also with our partners at Griffin, who are doing some fantastic property developments. They've just picked up a award from the Buster Builders Association. So we've got to do a shout out to them. So well done to everybody, great stuff. As always, we have to start with a disclaimer, just to remind you that these are just my own opinions and that you should not act on anything that you hear until you've taken proper advice. Now, if you need anything, please reach out to us. We're always happy to help, but just make sure you think about it. We're well researched. All of the sources are at the bottom, but make sure you act thoroughly with supporting advice if you want to. And I always start these update seminars where we finished off last year, just to take into account of what we predicted and what actually happened. And we have the four main food groups, as always: stock markets, currency, interest rates, and of course the Australian property market, which is near and dear to all of our hearts. With the stock markets, we expect them to remain very volatile, but with a positive outlook, overall. And that was very much true. We've still got incredible volatility, but we ended up in the positive, and we'll talk about that more later. With the currency, I still maintain my views that 70 to 75 cents against the US for the Aussie is the right range. And for a while there, we were correct as the Aussie dollar improved past 70 cents. But in the last few months, the Aussie dollar has been smashed and has gone down below 64 cents for a while and just finishing slightly above 64 cents as I film this today in the early part of November. Now, I still maintain that I think it should be 70, 75 cents, but we're seeing a lot of manipulation, and we'll talk about that why, but got it right for half the year and not the other half. In regards to interest rates, we predicted that there could be up to another 3 rate rises, but they weren't really necessary. There was actually 2, so we'll take that one. And it was sad to see those rate rises. But the good news is we haven't seen a rate rise since June, so that's coming up now to 5 months. But we are in the era that we might sneak another one in before the end of the year. We'll see what happens. And then with the property market, we were very bullish. We feel that there's still undersupply, there's still demand, so we feel very comfortable there, and that pretty much came true for us. We saw the likes of Sydney and Melbourne, who were hit hardest by rate rises, have started to come back in the latter part of the year. WA and Queensland doing nicely, and the property market is struggling at the moment for supply. It's got extra demand, which is fantastic if you're already in the market as an owner. And we'll talk about what's next for next year. But not too bad on our predictions. Let's see how we go with this year. And what I want to start with is Australia. And I've got to tell you, I love Australia. I'm unashamedly biased. I've spent 30 years helping people to buy in Australia, get their dream homes, migrate, and get back to Australia as expatriates. And there's a lot of reasons why virtually everybody always wants to head there, stays there, and hardly ever leaves. And the first one is the fact that the lifestyle is exceptional, especially if you've got families. It's a terrific outdoor world. It's a fantastic place to be. But as a family, there's nowhere safer, nowhere nicer, nowhere more comfortable. Our remoteness has ended up being a key element of our quality of life. And particularly at a time like now when we're seeing all sorts of kerfuffle in Europe, and the Middle East, Australia being so far away from all the troubles makes it a very attractive and safe place to hang out. We don't have to worry about conflict in our region. And then we've also got a situation with our environment that we're not being polluted by our neighbours. There's many places in the world that have very environmentally conscious, but their neighbours next door don't have the same views, and they can't stop that happening. But Australia is surrounded by water, thousands of miles from its next neighbour, and therefore we benefit from that because we can control our own environmental destiny. We are also, I think, the fairest place in the world to be. There's any opportunity you want, of any gender, any persuasion, any race, it is open to everybody. There is no discrimination, there's no bias. It's fantastic, and there's very few countries, if any, on the world that could compare to that than Australia. And also the opportunity to advance for everyone is real and permanent in our culture. You know, if you have ability, if you have inclination, if you have persistence, you can rise to the top and hit your goals in Australia without any hesitation. And our environment, I think, is just spectacular. You know, and if you get around, there's so much diversity, there's so much change, there's so much openness, it's exciting, and there's so much to see and do that I don't think you could do it all in a lifetime. You might have to come back again. And that makes it oh so livable as the place to be. Now, you don't have to take my word for it. If we have a look at the world's most livable cities, Australia is once again gaining prominence. Now, if you look here, we've got 5 of the Australian cities, and basically there really is only 5 main cities in the top 16 of the world. So 5 out of 16, Australia. Now, Melbourne is the leading most livable by Australia at number 3. But if you look at historically, Melbourne was traditionally number 1. It got pipped off the post there back in 2018 by Vienna, and it moved outside or to the top end of the top 10 for a while, but it's now back this year at number 3. Sydney popping in at number 4 after being 13th last year. Adelaide moved from 30th to 12th. Perth is equal 12th, having advanced from 32nd, and Brisbane is 16th, having advanced from 27. Now, this is an incredible free advert for anyone looking to where should I live in the world. When you see 5 out of the top 16 cities in one country, I'm telling you, that's where you want to be living, that's where you want to head. And this continues to be persistent and consistent. You can see Australia and those cities have been in the top 10 most of the time. And I think you'll find in the next couple of years, you know, Adelaide, Perth and Brisbane will sneak back rightfully into the top 10 again. But 5 out of the top 16, you know, that's a message there somewhere. If we have a look at one of the other things that makes Australia so special is the fact that we are totally compassionate. Now, this was very evident during COVID, where the government of the day did everything in its power to keep people safe, keep them in jobs, keep the economy moving, and not have the place decimated like a lot of other places were. You know, if you're unemployed in Australia, you don't have to worry too much. You're going to get training support, you're going to get employment support, you're going to get payment to make sure you get through until you get that job. And basically in Australia, we're almost at full employment. We're at record low unemployment rates in the country. There's a job for everyone if you want it. You just have to make sure you're capable, but there's lots of training support if you need to reskill. If you're a pensioner, there's payment if you cannot afford your own retirement. If you haven't been able to save up enough, the government will pay for you, and also you get extra health benefits, and you also get at-home care packages where the government will help you live in your house for as long as you physically can. If you're disabled in any way, we've got an incredible program, the National Disability Insurance Scheme, which allows you to get support from the government, financial support, physical help, all sorts of medical support if you have any level of disability, and it's an incredible system that's working fantastically well. You know, if you want health benefits, we've got a terrific medical system. It works fantastically. The Medicare keeps everything paid. If you want to top up a little bit to go to private insurance to get to the front of the queue, it's not a huge expense. So it's a very fair and reasonable system we have in Australia, one of the best in the world in my view. In education, there's great schools, there's great programs, there's great universities, anything you could possibly want. And if you're half good at sport, it's a sporting nation. So you're going to get a lot of encouragement to advance to elite level. There's fantastic programs in every single level, in both genders. It's a terrific sports system. And our infrastructure is fantastic when you consider how big the country is. Thank goodness most of it was built before I arrived, because it would be a heavy load of work to do to build those highways across the country. But given how big it is, given how few people we have, it's an incredibly powerful system. And our legal system is probably, I think, one of the fairest in the land, on the planet. It's terrific. If you're not getting looked after properly at work, you've got rights. If you're not getting looked after in the community, you've got rights. And those rights will be policed and enforced to make sure you have a good life. And of course, in regards to our Indigenous people, we recently had a referendum to move them into a voice mode. That did get told no. But I would like to go out on the record saying I don't think no meant no to supporting the Indigenous. I think it meant no to not having enough information about what was going on with regards to the changes. And I think the government probably did not provide enough clarity as what's going on. But there's a lot of support already in play. There's a lot of structure already in play to support those Indigenous. You can never have too much, apparently, so we'll look at that over the coming years. But it was not a slap in the face for Indigenous. It was to say, hey, we need clarity before we make big change. I thought I'd just give you a few fun facts about Australia that you may or may not know. In terms of population, Australia is 54th in the world with 0.33% of the population. And if you look there compared to America, which is third, and China, which is number one with 18%, we're a long way to go, especially when you consider how big we are. Interestingly, our population 100 years ago was 5.7 million. US was 111 and China 440. And now Australia's got 26.4 million people, where the US has 340 and China is 1.4 billion. Now, even though they're significantly higher than Australia is, if you look at the maths, Australia has actually grown at a faster pace than both of those in that time. You've gone up fourfold, almost five, where the others have gone up threefold. So our pace is there. Now, I don't think we're going to catch them anytime soon, even though we're growing faster, but it just shows we've got a lot of capacity. There's a lot of economic value in having populations of those mass, and it is a snapshot of what the future will become, because if we go another three or fourfold in the next 100 years, that's going to put us up towards 75 to 100 million people, which will be pretty incredible, given where we are now. If you look at the total properties, there's only 11 million properties in Australia right now, compared to 142 in the US and 474 million properties in China. Our average wages is 1,800 Australian dollars compared to 1,100 in the US and 1,000 in China, but the buying power is fairly similar in situ, so Australians do pretty well when it comes to average wages, and they get great support with overtime rates, etc. This is probably one of the most important ones I feel, is this pension saving as a percentage of GDP. You can see we've got 147% in pensions compared to our GDP as a nation, which shows that Australians are well safeguarded into the future, to cover their retirement spending. And this has been a significant change. It has been 30 years in the making, way back to the Hawke and Keating government days, where superannuation became a focus so that people could adequately fund for their own retirement. And this is the byproduct of those great policies back in the 80s. In terms of unemployment, if you're unemployed in Australia, you'd get $375 a week to help you until you get a job, compared to $378 in the US and China, $366.1. But importantly in Australia, there's no time limit. If it takes longer than you thought, you still get it. And you get additional support with training, help with resumes, anything you need is there to help you. And if we look at the owner-occupied, Australia is one of the highest in the world with 66.3% owner-occupied rate in the property market, compared to the US of 65.9, but China, incredibly, is 89.7%, which is huge. But Australia at 66 is one of the leading ones in the Western world. And finishing off, I thought I'd just throw the corruption index. Australia's 13th on the corruption index, which is pretty high. America 24th and China 65th. So we're a very fair, reasonable and honest society as a rule. And these are just some fun facts for you to share about Australia and see how you go. Another thing I wanted to show you was how much room we've got in Australia. So if you look at the population density around the world in terms of country, Macau in China is the most packed place with 21,000 people per square metre. Singapore 7.6, Hong Kong 7,000. So we've got a heck of a lot of people packed in there. Australia's not on this list, but just to show you what it is, we've got a massive 3 people per square kilometre compared to Macau at 21,000. So we've got a little bit of room to move. And WA, where I live, is only 1.1 person per square kilometre, which is huge. In America, to give you perspective, in America and Australia are similar land size. America has 37 people per square kilometre. So there's a lot of room for more migration in Australia if we manage it and track it accordingly. But this is a key thing. If we look at property prices, there's a lot of debate in Australia about is property affordable or not affordable, and it's still some of the most affordable in the world. Unfortunately, it's getting more and more expensive, And that means you have to get less and less choice and go further and further out. But it doesn't mean that affordable is not available. I do genuinely believe that there is affordable housing. The problem is, as a society, we've changed our views where we are more demanding and selective, and we want that affordable housing to be in the place we want it, not just somewhere we don't want to live. Now, there's a difference between the two. But if we compare Australia's prices to the rest of the world, it is still unbelievably cheap. We've got Hong Kong at $30,000 a square metre US, and Sydney is half that at $15,000. Now, we're seeing a lot of honkies sell up there, come down to Sydney, can't believe their luck how cheap Sydney is. And Sydney is our most expensive place, because if you look at Brisbane, it's second at $8,700 a square metre, Melbourne $8,200, Canberra $7,000, Perth $7,000, Adelaide $6,500. So if you sell out of Hong Kong, Zurich, Seoul, Singapore, you are going to be able to buy not just a similar size place, but what you're also going to get is a substantial uplift in quality. What these numbers don't show is like for like. And let me tell you, having been to Hong Kong many, many times, having lived in Singapore for many, many years, you're not getting as nice a property in Australia for the same amount of money, in fact, half or double. So Australia's value is still incredibly good. And when you package it up with all the other lifestyle benefits, it's no wonder that people from overseas want to migrate and start a new life financially secure in a lovely home, bigger than probably what they've come from, at a higher standard of living than they're used to. Now, and one of the things I'll remind people all the time is that the population of any place in the world is still the key driver of price growth on property. So Australia is only cheaper than everywhere else now because our population density in particular has not reached the levels of some of these places. As that density increases with time, that price will also increase at the same pace. So be very, very careful to not wait too long to get your bargain, because as that density increases, this is what the future property prices will start to trend towards. So mind yourself there. If we look at the migration, this is one of the key secrets to why Australia has been a strong economy, a strong and safe property market, and a great place to live. People keep coming, and that's improving our economy, improving our lifestyle, improving our diversity and everything. And in the last 11 years, we've had over 3 million people move in. So it's a huge amount of people that have snuck into Australia over that time. But the key here is the quality of that migration. What we have is, initially 59% of our migration each year is coming in through the skilled migration class, which means that they have qualifications or skills to bring to the country. 32% is coming under family migration, which is often parents seeking to retire with their children, or joining their spouses. So we've got 80-90% in the top end. We've got 9% coming under humanitarian, which is fantastic because we want to be compassionate. That's the sort of society we are. But those people are getting second chances. Now, it's not a huge amount compared to the rest, but do bear in mind, we give incredible amount of financial and support to that refugee humanitarian class. So we can't afford to bring in too much, and we have to manage it appropriately. But this is critical. The other thing that's important to note is the age of these people. And what we've got is 17% of the skilled category migration is under 19 years of age when they come in. So it's the children of people with degrees, people with qualifications. And it's 14% overall of the 3 million people that came in the last 11 years were under 19. Now, why this is critical is we've already done the planting for the harvest in years to come. These people are starting to move from under 19 to over 19. They're getting into their schooling, their university, their workforce. They're now contributing to the society, contributing as taxpayers and building the economy, regardless if any new people turn up. But this is the secret of our migration, the quality, the strength and the youthfulness of it, with most of it 37 years or 38 years or 34 years average age. So it's youthful, it's resilient. In the prime working years, in the prime tax-paying years, we're bringing these people in the country, and hence why we're having a resource boom in Australia that I call the human resource boom. Not the mining resource boom, the human resource boom. If you watched our budget seminar, you'd recall that the government revenues from PAYG, income tax from individuals, is going up significantly. It went up 40, 50% in the last 2 years as a result of this migration and people moving into the workforce and becoming taxpayers as well as local residents. It's a fantastic momentum. If we have a look at the key things that matter to us now, let's start with number one is the stock markets. Where are we at? Australia's fantastic, but we've always got the influence of financial things going on. Let's have a look with stock markets. We're in a situation where there's a lot of noise around. We've got a situation where everything is confusing. We saw earlier this year in the US, some of the banks that got smashed over there and fell over. We've had inflation being the dominant topic for most of the year. And we've also had recession talk throughout the year that has not eventuated. Most of it is noise, and you should ignore the noise. But inflation to me is the big thing. Everyone is targeting inflation, and particularly that's what the reserve banks around the world are going up and lifting interest rates for. But I genuinely do not believe inflation exists in the modern world, because inflation, I think, has been replaced by what I call greedflation. People put out prices that are higher than normal, and if people pay for it, fantastic. Now the easiest way to control inflation is not through interest rates, it's by the fact that if you and I as consumers don't buy the goods. If watermelon is expensive, don't buy it. I guarantee 2 weeks later when it's about to go too ripe and be thrown out, it will be cheap. If you don't want to have inflation, be sensible with your buying. Don't lift interest rates, lift your sensibility and your spending power. But that's been the undercurrent in the world for the last little while. We've also got the fact that speculation still is the strongest dominant force in stock markets at the moment. Words rather than facts are being reacted to far quicker, far stronger than ever before in the history of the stock market. And that's concerning to me because we're seeing a lot of volatility, and that's going to stay in throughout. As a result, I remind people all the time of the importance of having a high dividend strategy with your stock portfolio. You cannot anymore guarantee on consistent and reliable growth because the market is too volatile. What you can rely on is consistent and reliable dividends to make sure you've got a supporting revenue regardless of what market conditions are. So ever more, dividends is critical for you. As a result, Australia offers incredible value. You can get in there, and the dividend culture in Australia is significantly higher than most other stock markets in the world. And right now, with the dollar being so cheap, the value is off the charts. It's not uncommon to get a 5, 6 or 7% dividend in Australia, and it comes with tax credits if you live in Australia that will normally offset pretty much all of the tax payable. Or if you live overseas, it means no further tax to pay, and it's a tax-free revenue. So look for those dividends. They're the thing that keeps you safe and secure regardless of market volatility. And this volatility is not likely to go away any time soon. Now, I used to watch shares move up on a progressive line with a little bit of volatility, but lately I've noticed that they sort of just hit high and low bands and they stay there because I think that makes them a lot of profit. This volatility is something we need to be mindful of, and it comes about because I think there is way too much money in the system. One of the things that everyone forgets is that every day, every week, every month in the world, a significant amount of revenue from the entire global payroll is put into a pension or a superannuation or a savings scheme to provide for someone's retirement. Most of that money inevitably ends up towards the stock exchange, and what that means is there's an enormous amount of capital coming in regularly, but limited amount of good quality shares. So the volatility has become more dominant because that capital has to be worked. It's a strange system, but it's right. As a result, I call it the era of the mini crash now. You know, we've moved away from having to have big crashes. And bear in mind, when I started this update seminar way back in 2007, I started it because I was nervous about what was going on in the stock market, and there was a lot of strange things, and I wanted to give people a heads up warning. Even I didn't realise how big a warning that would become, but I think we've moved away from big crashes into the era of the mini crash, and let me show you what that looks like. So here's the stock market over the last 2 years, and you can see a mini crash I call more than 5% movement up or down, and you can see on all these occasions we've had mini crashes over the last 2 years. In total, 14 mini crashes in 2 years on the stock market. We don't need a big crash when you've got this many mini crashes. But don't be worried about it. And the reason you don't need to be worried about it is because after every mini crash, the recovery time now is so quick and so fast and so reliable that you just don't panic if it happens. You know, mini crash here, recovery, mini crash, recovery, mini crash, recovery, mini crash, recovery. That's what's happening. Now the thing is, big money is trading these mini crashes. You know, in and out 5% is a lot of money over a short period of time when you've got this level of reliability and frequency. And hence why the rich are getting super rich, the normal people are getting the crumbs. But this mini crash is the new norm in the world. And what it does say to you with your stocks and shares, don't look at the price. Look at the company, buy a good company at a good price with a good dividend and just let it be. You can see there still is a genuine upward trend. Over the last 2 years, we've seen the FTSE go up 27%. We've seen the Dow go up 17%. And we've seen the Australian market up 15% despite 14 mini crashes. So the bottom line is we don't need to be afraid of a mini crash, we just have to be aware of them. If you're lucky, you have a bit of money. So if you see a crash and you have some cash, have a splash. That's the new motto. Crash, cash, splash. And believe you me, with this regularity, you only have to save up every now and again, and you see a dip, buy in those dips, hold, get the dividend, have a happy life. But it's going to be the future just like this in my view, and you need to be aware of it so that you don't panic. The only time you would be worried about the stock market is if you were selling every time there was a mini crash and therefore copping those losses. But as long as you don't panic, don't sell and wait for the recovery, you will be fine. And that's the motto of the modern day stock market. If we have a look at our usual companies. Now again, these are not recommendations. These are the same companies I put up every year just for reference. And I use the same 12-month period, September, to give you a reflection. And the first thing you can see is have a look at the size of the profits. And this is the thing again as society that we've gone off the rails. We have corporations making incredible sums of money. BHP making $12.9 billion after tax. HSBC 15, Bank of America 26, 10 billion for CBA in Australia. Microsoft made $72 billion US after tax. Now this is an incredible amount of money, and as a society we should be questioning it, saying, how did you do that? That doesn't seem right. And this all feeds into my theory of greedflation. To make this sort of profit, they're making incredibly high margins, and they're congratulated for doing that. But this is what creates inflation. This is what creates separation of wealth, from the high to the low. This is something that as a society we need to talk about at a better level. In the US, under the Trump government, they reduced corporate taxes. That didn't make sense to me, still doesn't. And when you're making this sort of money, you can afford to pay 5 or 6%. In Australia, corporate taxes is not an issue because it flows through to the individual. But we need to have a conversation as a society whether this is fair and just. But what it does say, if you are a stock market investor, it's unlikely any of these companies will go broke if they're making billions of dollars a year in profit. So you don't have to be concerned if that stock price dips because the company's not going anywhere. If you see a good company making a good profit like this, and that share price has a mini crash of 5%, buy it. It's a bargain. It's on sale. I love to go shopping when the sales are on. If you look at the returns, okay, BHP, its profit went down more than half, but its share price went up 3%. Strangely, the year before, when its profit almost tripled, its share price went down 12%. And you can see the weird thing about this whole list here is it makes no sense. You know, in theory, if your profit goes down, so too should your share price, but it went up. If your profit goes up, your share price should go up. You know, nothing makes sense anymore because it's all pushed and pulled to make that volatility stronger and stronger. So again, don't be worried about if it's not heading in the right direction unless there is a fundamental shift in what the company is doing or changing. But you can see these profits are superb. Those company profits will flow into share price eventually. And if you see it cheap, buy it. And that just makes sense. Overall, if you have a look at the various indexes, the Dow was up 7.5% on the year, which is as we predicted last year. We thought it would move back into positive territory after a negative one last year. The Aussie market and the All Ordinaries was up 3.5%. Which was a tough year, you know, not too bad a result, up from a negative. And the FTSE, even though it was the best performing over the 2 years, the FTSE was the worst performing over this 1 year band. And that's the thing about statistics. You can move them to suit your argument no matter what. But that's why I leave these the same every year, so we're always comparing apples and apples. So my first prediction in the night being the stock market, I think we're going to see that volatility continue. I think we're going to see the era of the mini crash continue and manifest. But I do think we're going to move into general positive territory. You know, but you want to be buying quality, particularly when it's cheap. You want to be buying dividend for safety. But I think you'll find that the stock market will have a reasonably good year despite all that's going on in the world, in Ukraine, in Middle East, etc. So that's prediction number one, a decent year for the stock market. Moving into the dollar, again, I was talking about stocks there that don't make sense. Excuse me, the Australian dollar doesn't make sense. The Australian economy is the best performing economy in the world right now. The government is in a surplus, the economy is growing, unemployment is at a low level, our minerals are being sold, everything is going perfectly well, except for our dollar. Somehow, our dollar has gone from a high of 75.8 a couple of years ago down to 64 cents, and it touched down at 62 at a various stage. That does not make sense. Now, when you consider the US dollar, which is strengthening, is on the back of a very weak economy that they can't decide whether it will or won't go in a recession. Personally, I don't think it will. But there is a $1.7 trillion deficit in the US federal government budget. That's bigger than the entire Australian GDP. And no one's doing anything about it. And we've just seen again another big debacle in the US, our government, choosing whether they could increase the borrowing limits, and then it got rid of the Speaker of the House. It's a mess, that political system. And Donald Trump may well be back re-elected as president, and maybe doing it instead of the White House, he might do it from the jailhouse. That's how crazy the American system is. Yet their dollar is strengthening. Now, to me, this does not make sense fundamentally, and therefore I do not accept it as a genuine trend. It may well be that if you have a lot of US dollars and you're worried about the US economy, the best thing to do is to talk it up and then get out of your positions. Pass those positions to the other little people like us by telling them, oh, you need to buy what I am selling. And I think that's probably more what's going on. I would be getting out of US stocks to buy Australian stocks because their dividend is higher and their profits are getting better and better and the economy is safe and reliable. Maybe that's what's happening. It's not that the Australian dollar is weak, but there's opportunism to make it weak so that I can acquire quality assets. But to me, this is not sensible. As a result, my second prediction on currency, I'm going to hold the line that I've held for the last few years, and I'm going to go on record again saying 70 to 75 cents is what I personally believe the dollar Australian should be against the US. Now, we're a long way from that mark right now at 64 cents, So there's some work to do to get back to 70, but I genuinely believe the Australian dollar is undervalued, and it's a fantastic time potentially to send money home, buy some quality assets at a reduced rate on the exchange. Where this is going to be very, very fantastic for people is the migrants. Heaps of migrants are arriving with their foreign currency right now, and they're getting even better bang for buck than they were expecting. Now, again, you think if they've got this much migration in Australia, that the demand for Australian dollars would be strengthening it. So it does not make sense. So my prediction for currency, 70 to 75 cents once again. Let's see how that goes over the next 12 months. If we look at interest rates now, interest rates on all parts of the world have been pushed up way too fast, way too quick, and maybe way too high. But I'm not sure way too high. What we've seen in Australia is it's gone from a 0.1 up to about 4.25. But you can see there, we're still under our historic average, which is around that 4%, 4.5% mark. So rates are still on the low side of history. And there was a lot of talk in Australia about, oh my goodness, rates are rising. And I probably was the only one saying, no, they're not rising, they're returning back to normal. And that's what's happened. Now, to me, they should not have gone up so fast. It created a fear in the market. They should have put it up, pause, and let things settle. But they chose to go rise instead. I don't think that was good policy. It ended up, costing the Reserve Bank governor his job, but we'll see what happens with the new lady in charge, whether that matters. Now, if we have a look, we did have a prediction in our March update that we would see possibly 3 unnecessary rises, and we factually saw 2. So thank goodness we didn't see the 3rd, and we've been on pause now for quite a while, since June. Now, what we do have is talk and speculation in Australia that a lot of people that were taking advantage when the rates were low to fix their rate are now coming out onto the higher rates in the market, and that this is potentially going to cause some catastrophe. Well, they've been talking about it now for over a year, and that hasn't occurred. And the reason it hasn't occurred is because all of those loans were given at cheap interest rates, but were qualified at the higher current rates that we now face. And that's because Australia has a very sensible and robust banking system that protects the borrower from undisciplined, unscrupulous banking. And therefore, every bank has to make sure that customer can absolutely afford the loan, and they have to assess your loan on a possible rate rise environment, which was at the time adding 4% of pretend interest rate to see if you could afford that. Luckily they did, because that's what it's coming out at. Now, that's not to say that this is not going to make people's life uncomfortable because they've got used to having cheap interest rates, but it just means they're going to have to find ways to find the extra cost, cut back on some lifestyle, and just get through it however. But it's back to normal, still on the cheap side by our historical standards. And you can see that makes it what I call uncomfortably comfortable. I would love my rates to be low still, but sadly, those days are gone. If you did not fix, you didn't take advantage, that's unfortunate. Do I think rates will go back to these low levels? No. Do I hope they would? Possibly. But don't forget, why did they go there? We had a global pandemic. It wasn't because the banks said, hey, great time to lower interest rate. It's because we had a global catastrophe. You would not want to wish upon anybody another global catastrophe just to get our interest rates back down. So rates have got back to where they are. If we have a look at what that is, at least we're seeing now the RBA take a stand and look position. But if you look at what they are now compared to what they were at our last update seminar in March, the owner-occupier rate is now 569 or thereabouts compared to what it was, 474. Now that's almost 1% higher than just a few months ago. But you might recall I just mentioned that the RBA has only put rates up twice at 0.25 apiece. So what's happened is the banks have put rates up more than the RBA. Again, not talked about in the general community, but it means the banks are going to be even more profitable than usual, and are doing half of the RBA's work for them. Note to self, maybe buy some of those bank shares where the dividends are 6% plus and likely to rise, because this is pure profit for them. But you can see the fixed rates are sitting around 6% and are not great value, except maybe the fixed for 3 years, which is sitting at 5.69. That's the only one that's at the current level. What they're saying to you is that there's a possibility in the short term of another rate rise, or possibly two, but in the long term, the market feels that the current rate is about the natural path. In March, we were saying it probably wasn't worth fixing your rates because we felt that fixing wasn't going to be much variance to any rate rises that were coming, and we were correct in that regard, and we probably still hold that view. So it's hard to know what to do. If you want certainty, definitely taking perhaps the 3-year rate being the cheapest will give you peace of mind for the next 3 years and not having to worry about further rate rises. But you might be a little bit upset if they did fall a little bit. But I've got a feeling that they might rise before they fall, and whatever the period that you save during the rising will be offset by what you lose when they fall, and you'll end up probably coming out pretty much the same anyways. So if you want to sleep like a baby, have certainty, consider and assess the merit of that 3-year rate. The others aren't really worth taking at this point. But overall, my prediction for interest rates is I'm going to be similar to what I did in March, where I think we could see 2 more rate rises, both unnecessary. There is no logical argument to put rates up at this time other than allegedly chasing inflation. Now, I think that's a false argument because putting interest rates up, ironically, lifts inflation. It's putting pressure on daily living costs. People demand more wages without productivity gains is more cost. More cost means everything goes up more expensive. Everything more expensive means higher inflation. So it's a bit like that dog. I don't know if you've ever seen one, a dog that chases its own tail, just going round and round and round. And that's what I think the RBA is doing when it's choosing inflation, chasing with interest rates. It does not work in the modern society. The only thing to stop inflation, change your spending habits. So prediction on interest rates, possibly 2 unnecessary rises, hopefully not, hope to be wrong there, but we are at or about the high point of this interest rate cycle in my mind. If we have a look now at the general property market, and the way I always start it is with the population, because it's the population growth that is underpinning not only the property markets, but the general economy. And in Australia, we are back at record levels of migration. In the year 2, December 22, we had almost 500,000 more Australians than the year before, over 300,000 of those from migration and returning expatriates. Now you can see New South Wales, which the year before had fallen off the cliff in regards to its population growth. It went from 1.1 to 0.4 to 0.1, boomed back into the contention with 138,000 more people in Sydney in the last 12 months. Melbourne, which had gone into negative population growth, largely because the student population left during COVID, they're now flooding back in, and they went to one of their highest numbers, certainly since 2018, 137,000 more people in Melbourne. Queensland is booming. It's for the first time gone over 100,000 plus incoming migration. A lot of that is coming from New South Wales and also Victoria. So you're seeing an interstate migration of significance as well as international migration. And that's the first time they've pushed past the 100,000 growth, 2.2%, which is a huge growth number. South Australia at 1.6 is well above their averages, massively above their averages. WA at 2.3 is the highest growing population by percentage in the country, and 62,000 is a lot of people. You know, it's booming, that the thing with the mining as a support, but not the dominance, but with the lifestyle and the enjoyment and the affordability. That's what's making people look and choose WA over some of the other places. Tasmania, Northern Territory and ACT are all getting their share, but the combined of 500,000, 1.9% population growth is amongst the highest in the world, And if you remember back to earlier, it's also the best quality migration in the world. This is what underpins everything. This is what's making our property market strong and demanding. This is what makes our economy very powerful, because 500,000 people all need a bed, all need clothes, all need food, all need transport. They need more services. We've got more and more customers, and that's now being reflected in our retail growth numbers across the country. It's starting to form in line with this, where before we used to have sluggish growth in retail, even with strong migration. This is now being shown up in our retail numbers as well as. So this is keeping the economy strong. And importantly, this is 500,000 people. Roughly 200,000 of them are taxpayers, contributing into federal government, state government coffers every day of significant sum, billions of dollars, which saw the budget go from what was expected to be a $5 billion deficit to a $20 billion surplus when they recalculated the numbers. Incredible that Australia is in surplus at this time. So that is the driver of it. And if you think that's good or bad, depending on your point of view, the latest numbers are even more dominant. You can see them here, that we've now moved into a 2.2% growth year on year. So you can see here, if you wait and think that's good or bad, just think of it now, the latest numbers to March 23 are even stronger, with 560,000 growth and 2.2%, which is by far and away the strongest and best quality migration on the planet today, right now. So it's not going to slow up this. It's going to continue to drive momentum. It's going to continue to drive the economy. It's going to continue to influence property markets in a massive way, even more than it has in the last 20 years. If we look at the Australian property market, that is what's feeding into our new state of play. And what we have is a situation where we had a small pause on the property market because everybody got spooked with rapid rising interest rates. And again, the language in the press, the media, it was all about, oh my goodness, rates skyrocket, rates rise, rates rise. Not rates return to normal, but panic terminology, as if it was some sort of massive escalation, unusual. Now people are starting to get used to it because they haven't been lifted since June, which is a good thing. But what is happening is some other key elements in the market. Interest rates has calmed down in that sentiment, but the biggest thing that's happening in Australia at the moment is that there's a load of people downsizing, and when they sell their home in Australia that they've lived in, there is no capital gains tax. So they sell, the entire proceeds are available, and that's creating significant cash buyers to go out, and in particular the baby boomers, which are 56 to 70 years old at the moment, are looking to downsize or upgrade their life, relocate to nicer areas, retire, and they're going with significant pots of cash, not in their superannuation, not in their savings, but from the sale of their previous property, particularly if they were coming from New South Wales, where those price points have lifted sharply over the last 5 years. And you add to that migration pressure at record levels, and again, most of that migration coming with skilled or family usually have money with them to buy their family home, to buy a nice property at a fraction of the cost of maybe where they've come from, and that's changing things significantly. And then you've got the construction industry, ironically, at this time of maximum opportunity. If you were a builder, there is no better time in the history of Australia than right now. People need housing. Migrants coming in need an additional house for every migrant that comes to the country because the other one wasn't available. But at the same time, the government has been so asleep at the wheel that the construction industry is in peril in Australia, and we cannot keep up with this demand, and therefore there's heaps of trouble and no ability to match supply and demand, and that's likely to continue for 3 to 5 years. You cannot change that quickly. It's going to take a long time. And the government is fueling demand by encouraging people to buy houses, i.e. with their first buyer incentives, with their new build incentives that the Liberals did, rather than helping with supply. And that's a big issue. The government should be backing off the demand pedal and pushing on the supply pedal. Instead, what they're talking about doing is building lots of affordable houses, and that's going to put even more pressure on the construction industry because they'll go do the jobs for the government instead of for the community, and that's going to be problematic. We're seeing also a situation where the market is split into two. You know, if it's a luxury, lovely house, it's going to grow at a much faster pace than an investment property, and that's what's going to happen. We're going to see that even become more prevalent into the future, and largely because the socio-economics is changing in Australia, where because of that sale of the baby boomers, giving them cash, they're not worried about interest rates, they're not worried about anything, they've got cash, they need somewhere to live, they're going to go buy it. So that's going to stay there for a long, long time, and the livable element is going to become far more profitable than if it's just purely investment stock. So what I would encourage you to do, whether you're investing or buying for yourself, is make sure you get the nicest property you can for your budget. Wherever that may be, whatever style you like, get it so it's nicer and it appeals to someone to live in more than just to hang around. If we have a look at the other things, is that supply issue is going to drag around for one heck of a long period of time. As I say, it could be a 5-year lag before that fixes. And then we're also seeing people, whinge about things like Airbnb, as if that is hurting the market. Well, I don't believe it is to the great extent that they'd like to make it sound like. And in fact, it's helping the market because people can go on holiday at a more affordable rate. But is the government really entitled to say how I want to deal with my property, whether I want to deal with it long or short term? Should they be influencing my decision? I don't think so. I don't think so. They can create encouragement or disincentive, into a market how they see fit, but I don't think they have a right to stop on my throat and tell me you can or can't do something with my own property that I've paid hard-worked money for. And then we're seeing a situation where that owner-occupied rate is going to continue to rise in Australia, and that's going to make it harder and harder for rental property market because investors are not being given a lot of incentive at the moment to come in, and therefore as people buy to live and it's no longer to rent, that rental pool is contracting and contracting and contracting. The demand is still strong. Rents are going to continue to rise at a pretty fast pace. What we've seen in doing that is that all the states in Australia, when we look at where they are on the map, I still think they're fairly consistent to last year, and they're still in what I consider to be the period of opportunity. I think we're just at the start of this supply crisis. I think we're just at the beginning of the demand boom, and I think we're going to see a very strong property market largely because of a significant amount of this downsizer and a significant amount of migration coming into the country. So anywhere in Australia to buy a quality, livable property is right in the period of opportunity in my mind. And to show that, I'll give you a look at the latest stats. But before I do, I just wanted to also point out that, I love the property market. I've encouraged people to buy property for ages, but at the moment there are some issues with it, and all the glitters is not gold. And we have to look at some of the key issues that are affecting particularly investors in Australia, but the general market, and that is stamp duty in Australia. Now, stamp duty is calculated as a percentage of the purchase price, and as the purchase price has risen, the stamp duty as a percentage also has risen to the point now where I think it's got to be ridiculous. Now, stamp duty in most states is between 4 and 6%. Now, that was usually 4 and 6% of 300,000 and then 500,000 and then 600. But in most of the big states, it's now $1 million, $1.5 million, $2 million, $3 million. So you're paying 6% on $3 million. That is $180,000 to buy a reasonable home in Sydney. That's the stamp duty cost. What is it for? To stamp a bit of paper to say this contract exists to move from you to someone else. That is an extortionate amount of money. And if the government was genuinely serious about helping people with affordable housing, look no further than stamp duty. Stamp duty at that percentage is off the charts. Now the government could easily say, hey, let's just rewind it to a decent cost of, for argument's sake, maximum $30,000 per sale, or 50, or 100, or set it back to a price, that was before. Cap it, do something, but don't leave it as an open-ended revenue stream, especially when it's going to nowhere and just general revenue to be wasted. If you have a look at what goes on, is not only do you have stamp duty, but when you buy a newly constructed home or an apartment, there is GST in that price. Now, who gets the GST? The state government, who charges you the stamp duty. So to me, this is a double dip. They should stop doing this, because if they're serious about fixing the market, the number one issue is supply. GST should not be on properties, full stop. 10% is the rate. That is a huge amount to put on a $1 million, $1.5 million, $2 million thing. It's designed to be on something cheap, $100, $200, $500 service, not hundreds of thousands of dollars. Now again, why should they double dip? If they're dinkum, remove GST from new construction to encourage more property into the market to fix the supply shortage and balance the market quicker than otherwise. And they need to do that because construction costs has gone up, so we need to get some relief into the construction industry so that they start building more. Right now across Australia, the construction costs have risen so much that many projects that were meant to be starting have not commenced and are not likely to commence, if ever, or for many years. That has to be fixed, and the GST removal is the quickest and easiest way. And then what I call the triple dip is if a foreigner buys that property, then they also get charged additional stamp duty as a foreigner of 7 to 8% depending on the state. And if you have a look at that over the period, it's now becoming very prohibitive for a foreigner to invest. Now, way back in December 15, we suggested to the government, and they took up the fact that we said, hey, foreigners wouldn't mind paying a fee, and they introduced what we thought was reasonable at $5,000 if you bought as a foreigner a property in Australia. Now, for those that don't know, a foreigner can only buy a brand new property. That's the law. If you do not have permanent residency, if you do not have citizenship, you cannot buy a second-hand established property. The only exception is if you are in Australia under a temporary visa and you can buy something to live in the established market. But as soon as your visa expires, which is usually students that finish their course, you must sell that home unless you move to a permanent visa. Now they brought that fee in, but even that has lifted from what was $5,000 to $6,000, and then it was doubled in July 22 and increased again this year to over $14,000. And that's per $1 million. So it's $14,000 anything under $1 million, and then another $14,000 for every $1 million thereafter. So if you buy a big one, it's a fortune. On top of that, the state government started introducing additional stamp duty, 3% originally in Victoria in July 15, and then they increased it to 7%, 8% across the board, and now it's in everywhere except ACT. What you've got here is we went to the government and said, hey, don't do this. You cannot keep charging these foreigners. These were an important part of supply into the rental market. And you can see, up until 2015-16, we had jumped up to 40,000 plus sales to foreigners each year, which was supplying enormous amount of rental, enormous amount of property, enormous amount of construction, employment, growth, activity. But what happened was it dropped off the cliff. I don't think because it was delayed. I think no one knew about it until they started to finish the buildings. And once that word got out, it went back down. Now, we've usually had about 5,000 foreign sales a year. And you see we're now back at or below that level, which is quite tragic to have gone back into reverse at a time when we need as many properties in the market as humanly possible to cope with the vacancy, to cope with the supply shortage, etc. The government should be starting to incentivise foreign buyers like they are currently doing in WA, where they're giving concessions of up to half of your foreign buyer surcharge and stamp duty. But that's the only state doing it at the moment. But this is a disgrace in my mind. If you have a look at what's going on is on top of these high charges, we're also seeing each state government introduce surcharges for land tax. And land tax is the sleeping monster, because most Australians don't know about it because they don't pay it if they live in their house. But it's becoming ridiculously expensive if you live overseas. And the values have been sneaking up surreptitiously in the background. So if you ever lived in a house and then chose to rent it out, it would club you once you find out how much your land tax is actually going to be. And this is very, very concerning. And again, incredible sums of money for very little effort, for very little expenditure. It's just revenue for the governments and no one's keeping it in check. We also have a vacancy tax, federally and also in Victoria. And Victoria has become the unfriendly state for property investors, introducing a COVID tax, allegedly temporarily, which is there for 10 years. I'm not sure if my dictionary defines temporary as 10, but they're going to charge about $1,000 a year to every landlord, making them solely responsible for putting back in the coffers the cost of being in COVID when it was the government's choices to do. And then we've also got, coming up soon in Victoria, a short-term tax of 7.5%. Now the government is saying that that's not a tax on the landlord because they're going to push it onto the occupant, the person that's renting your house. They're going to charge them 7.5%. Excuse me, but it's about the fact that someone has to pay it. It's going to come out of somewhere, and it's just a cash grab for no real benefit. It's a terrible thing. If we have a look now at the statistics, we can see that over the last 12 months, Sydney was a flat market at 0.2. Melbourne actually went down 15%. Now, I believe that's not necessarily a genuine correction. I do believe that's because a lot of the top-end property did not get sold, and the average came down more because the top-end part of the normal sales were not there. But you can see, importantly, even if you look at the quarterly, it slowed down. Most of that was 9.4% in September and 4.8% in March. It's now calmed down to only a 1.8 reduction in June, and I think it's going to bounce back very, very fast as that market gets resilience back from that migration going from minus growth to 130,000 plus. And that's what you're going to see is a massive quick turnaround on that negative growth. You see, Brisbane had a calming year, probably because it just jumped too much. You had 14% and 23% in the 2 prior years. Too much, too fast, couldn't be coped with. You had to have a bit of a calming influence just for this period. But you can see that was only in September and December when the height of the fear of interest rates was in play. And in March and June, we've had positive growth come back into that market. Adelaide 4.4 is a good year. Perth 5.6, the best out of all of them, as we predicted. Hobart went down 11%, again, on the back of 2 enormously profitable years. Darwin is a little bit stagnant, and Canberra has gone back a bit, largely, again, I think non-transactional activity there. But overall, in this last 2 quarters, the market has stabilised after just a psychological fear of interest rates, and now is experiencing the reality of that population growth and undersupply. If we have a look at the REI numbers, you can see there's that 5% for Sydney, but the average value of 1.5 million is still something that's hard to find. Now you've got a situation where Melbourne is, say, 13% on REI numbers, 1% in the quarter. Brisbane slightly down. Everywhere's doing okay. And if you look at the long averages, 5, 10 and 15 years, only Darwin has got a negative growth in that 10-year box. Everything else has been quite consistently and moving, but Perth, I think, is going to be the stellar because it's had a very slow decade and is in line to recover and boost in that. So I think it's going to be the highest performer going forward. And again, if you look at the comparables now and from the average property price in Australia, which is officially 977, you've got a situation where Sydney is now 50% premium on the average. Now we thought that would come back and it went from 54 to 53, but it's re-kicked back to 57. Now Melbourne is almost at average. It's finally gone under the average with that bad technical year, but I'm not worried about that overall. And you see Brisbane, the discount to the average is getting smaller and smaller as we predicted. Perth, it's getting smaller from 44, 48, 41. Adelaide is getting smaller. So these were the states we predicted over the last couple of years would start to get back towards the average and are doing so. But overall, the market is stable and strong. You know, in terms of our predictions, you know, one of the reasons why we think the market is going to stay stable is because you look at the rental market as the barometer overall. And I don't think I've seen these numbers in my entire career. The Australian average vacancy at June was 1.5%. That is incredibly low, incredibly low. In fact, it's dropped 0.6. It was 2.1 this time last year. So that is as low as we can pretty much go. You look, Sydney 1.5, Melbourne 2.1. Now, importantly, Melbourne was 12 months ago 4.6% vacancy and has recovered to 2.1 in 1 year only. Now, Perth had a similar bounce back. And you see Perth is sitting at 0.8. Brisbane is just 1. These are incredible tight markets, and that shows the tightness of supply, the unavailability of options, and the underpinning that the market will continue to be safe, strong, and growing because there is no surplus supply anywhere to be found in the country, in the main cities in particular. This is why the market is doing well. And if you look at the subsequent result, annual rent increases on the right-hand side have been significant across the board. Now again, this puts pressure on inflation, this puts pressure on the market, this puts pressure on jobs and wages. Everything is pressure at the moment if you do not fix the supply, which the government can do by releasing land and reducing cost of stamp duty and buyer costs. They have the power to do it, they just don't have the appetite. They're making too much money. But this is why I'm going to say my prediction on the property market is that we're going to continue to see strong growth. We're going to see it based on the fact that supply is going to be slow, it's going to be expensive, and we're going to see tight rental markets, increasing population, and increasing cashed up buyer activity from downsizers and equity release as people go and live the best life with the property price sale that they've just achieved, largely tax-free, as they should. That's not a bad thing. It's a natural evolution. It's a reward for effort. It's a reward for risk. It's a reward for taking the stress of being an owner. That should be a justifiable reward. But it says to you, if you don't own, try and get in as quickly as you can before it gets more expensive. You saw the international comparisons. Australia remains cheap, and it's going to continue to be a strong market for quite a while until they fix and address some of those supply issues. Finishing off, if we have a look at some of the stats to prove that, you can see here the own loan commitments is dropped off because people can't find houses, but most importantly, approvals has also fallen off the perch. There's hardly anything coming through, but people that worry about Australians not being able to afford, if you look over on the far side, you can see their wealth is still very strong and their debt is still very low. The liabilities on average is 200 times or 2 times their average disposable income. Their assets is 8. So that's a debt ratio of less than a quarter. So we are in a very strong financial position as a community, and we don't have to be concerned. So expect this housing price push to be consistent for quite a few years. Finishing off, let's see what we've got. Can this fantasy of Australia as it is now, with great growth of wages, great growth of economy, great growth of population, can it continue? Well, perhaps my little wizard friend here, he can look to one thing, and that's to what happens elsewhere. Now, if we look, probably a similar guidepost is the US. It probably went from Fantasy Island to Nightmare on Elm Street. I don't think we are going to be like the US. I don't think we'll follow that path, largely because of the fact our political system is better, our compassion is stronger, and our community is more giving and forgiving than over there. So I think we'll be fine. We've got a situation where we can fund that premium lifestyle because our wages is one of the highest average in the world, because our retirement savings is one of the highest in the world, because our general savings is one of the highest in the world. And a lot of the people with property now have owned them for many, many years and have a lot of equity and low debt. And when they release that, it's going to give them power to go and upgrade their lifestyle, maybe downsize the property, but live an incredible future, either semi-working or retired. So that's a great thing to have. If you have a look at what's going to be the key game changers in the market in Australia coming up to the thing, and there's lots of them, and we've been predicting this for a long time, is that migration continues to be the driver, because it's the quantity and the quality that matters. They're coming in large numbers and with capital to buy their own home, to get set up, to do what they need to, which is great for the community, is great for the economy. But you've got to bear in mind that competition is real, genuine, and permanent. Don't complain about it. Push it and get your share. And if you have a look here, as that equity release is coming out tax-free, that's driving a lot of activity, a lot of economic value, and that's going to be there strong for the next 5-10 years as people, empty nesters, swap out of their houses into holiday destinations, retirement destinations. And you're also going to have inheritance kicking in like never before in Australia's history, and both living and death inheritance. We're now seeing many people that got into their first home in the last 4, 5, 6 years got their deposits from living inheritances from their parents. They didn't have to wait to save, they couldn't save, they got the money from their parents. Some that can't afford to buy are going and living with their parents and taking the savings in rent to go towards their deposit. This is going to be an ongoing trend as this equity particularly gets released and gets shared with the family. And then you're also seeing a phenomena of the digital money market. People are making money doing things that we never thought possible and making lots of it. Things like MyFans, Uber, all these things mean that there's more revenue into the system. I would do make a prediction that I think you'll find in the next 5 years a real big aftershock of the digital economy will be as the tax office starts to tap them all on the shoulder and say, by the way, all that money you've made on the internet with Amazon, MyFans, etc., did you know that's taxable and here's your bill? Wait till you see the aftershock of that. And then we've got a situation where we're going to get this quality dividend. And this is the thing that I love most about Australia. When you come down, the cleanliness on the streets, the quality of the roads, the quality of construction, the professionalism of the way everything has been done is a massive plus compared to virtually any other place on the planet. And that quality dividend is going to keep attracting people and giving the people that are already here the best lifestyle humanly possible. And that's what it's all about. It's all about lifestyle. Being in 5 of the top 16 most livable cities is incredible advertising. Talking to Australians about how wonderful it is. Visiting Australia and going, oh my goodness, how cheap it is, how wonderful it is to live. It's expensive for a cup of cappuccino, but it's cheap for a house. And that's what matters to most people. And we're getting tax friendlier and friendlier all the time. Income tax rates have come down, and we're seeing retirement tax is still the best in the world. So people's distorted view of Australia being a bad tax country is changing rapidly, and it's becoming an affordable tax destination as well as a great place to live. And as a result, you're looking at it being cheap by world standards. Now, when most of the world can sell up from wherever they are and buy in Australia and have surplus money to invest and live on, that's going to make it a high demand place for many, many, many years to come. And that's just a simple fact. So expect that migrations to stay strong. And then finally, we've turned that fantasy into a reality. We are creating this utopic society where you can get strong wages, you're under very little pressure, you can live a great lifestyle, you can have a lovely home. The fantasy is already a reality. I think we can keep it there, but the trick is that people are probably going to have to work a bit harder, which is what's necessary. Productivity is going to have to improve. But if you do those things, the reward will be achievement and ownership of something fantastic for an entire lifetime. As a result, I love a fantasy island. I love Australia. I hope you've enjoyed the seminar, and I hope you find your way down to Fantasy Island sometime soon. Thank you very much.